Hi there traders, GJ here. It was a bit of a hectic opening, wasn't it? An hour before Frankfurt. I set up for the London and the Frankfurt London candle, and then suddenly the alarm goes off. I take a look at my strength indicator and I get a massive impulse move on the Aussie USD and New Zealand USD. And we talked about getting that into break even really quick, and I did, and we'll take a quick look at that and then we'll get into the London Open. But here was the break, and the alarms going off was here, and it's looking like now with the London candle that this is set to continue on. But it pulled back up into here, and because I had 4 standard lots on the Aussie USD, I had my stop loss above here when we were way down here. So when this candle started to leave a great big wick, I wasn't waiting for it to get stopped out. I just put my money in the bank. Now when you see this in the context of the daily time frame, you can see that we've been in a strong uptrend, and we've been in that strong uptrend since the 13th of March. Okay, and the reason why I base everything around the daily time frame except when I'm trading the Frankfurt and London Opens is because I want to catch these big moves. And so here's my baseline, and you can, if you like this video, please subscribe to it. If this video is helpful, please subscribe to it. And while we're at it, I am not giving you financial advice. I'm not a financial advisor. I am a retail trader, which is very, very successful. I am not a prop trader. I'm not trading for another firm. Don't know that I want to. Maybe I will, maybe I won't. Who knows? But you can be successful at trading. And so why don't you just follow me for a while on Twitter, and you'll see what I do and why I do it. And there are 3 key areas for successful trading. Number 1, you've got to have a plan. And so you've got to have a set of rules. And basically a set of rules helps you to trade well. Now, if those set of rules are not helping you to trade well, then change them. Because the definition of insanity is just simply doing the same thing, believing that you're going to get a different result. So you can be doing the same thing over and over again, and you're still blowing up accounts. You're still not achieving your goals of trading full time for a living, and yet you're not changing. People don't change. They won't change. They just live on a hope that one day it'll be my day. Well, it doesn't work like that. It requires strict adherence to a good strategy. It requires very disciplined money management. If your losses are not smaller than your wins, you're going to lose anyway. You're just the road you count. And then when you get into a trade, I'm not going to tell you that, okay, if we get a break of this area here, we're going to this support. The potential is for that to happen. And you can see I've got pending orders sitting in on the USD. Why have I got pending orders sitting in here? Well, my idea was that this had come up and we'd had a long trend up. And you can see the importance of daily time frames. I want to get the big money. And so it gives you the time to do that. And when you've got an algorithm these are the only 2 indicators that I've got on here. And I've had to go and test my indicators. And basically all I've got is a baseline, a confirmation of an entry, and an exit. And I use a strength indicator that is my volume indicator. And it's just on another platform, and it's dedicated just to run that strength indicator along with the rest of my charts. That's all. I'll give you a quick look at it. That's it there. And this is dedicated, and I've found this really good, and you can see how strong the pound's been. And yes, I've missed out on some pound trades, but I've made a lot of money tonight by jumping in on that impulse move on the Aussie and New Zealand. You can't do everything. You cannot capture every pip in the market. So don't try. You just want to capture your share. And trading Frankfurt and London, I've got 4 accounts. I don't trade the Frankfurt London on every account, because trading the breakouts of the Frankfurt and London sessions, I can only focus on one account. So with my attention in on the Aussie USD, I missed out on some pips tonight. But that's okay, because I got a lot of pips. And you've got to be flexible and not fall in love. So you've got to practice good money management, have a good set of rules, a good strategy, and you've got to promise. You've got to keep your promises that you've got to follow those rules and don't diverse. New Zealand USD, let's take a look at that. Again, just, I was looking for a break of this area here. And I've got pending orders. In fact, I want to put pending orders below here, because this thing looks as if it's settling down now, and it looks like it's picking a direction. I'll show you why I think that. So here's the daily candle change. Here's the last big push up. Remember, we've had, like the Aussie, this big push up here. And this is why I like bar charts, because it's easy to see the open, the close, the high, and the low. It's real quick. And so for 1, 2, 3, 4, 5, 6, 7 days, it's just flattened off, and we've had this consolidation area in here. And when I see this candle at the start of this day, it opened up here, and then it moved up above the high of the day before, but it closed lower than the close of that day, and it's still, and then we get an inside bar, and you can see that it didn't really go anywhere. There's the inside bar of this one. So that tells me that things are slowed up, that this is probably slowed up. And technically, I've been saying we're due for a pullback on both the New Zealand crosses and the Aussie USD, the CAD USD, because the USD CAD has been falling out big. Now, if we go and have a look at the here we go. And we're looking like we're continuing today. You see it pulled up. This is the US dollar index. And since it broke this key level, and remember I keep telling you that if we get a close below this level and we see this sort of thing going to happen, I've been talking about this for weeks, you need to watch things like gold and silver. And the US crosses. Now, we haven't seen it play out. If we go back to 1, 2, 3, 4, 5, 6, 7, 8. So 2 weeks ago, let's just pick the New Zealand USD. 2 weeks ago, 1, 2, 3, 4, 5, 6, 7, 8 days. So remember, with the US dollar, we had this move down. Very significant move down, breaking up the key level. What happened to the New Zealand USD? It had this move up, and we were able to capture it. Now, if you squish this chart up here, you can see that this area here is a key level. In fact, I'll put it up to the big number of 0.67. You can see that this is a tough area. It's going to be a tough ask for this to break through, close above that, and make a comeback and get up to 68, 69, 70. I personally don't think fundamentally the Kiwi has got it in it. It can't do it, because our economy is under pressure too, just like the Aussies. So what are we looking for? If this is a key area in here, I'm looking for a bounce off here or a close below. And we talked about this being a key area a few weeks ago, and look what happened. And so you do the same again up here. And this is why I love the time frame of the daily. You know, once you get the break of these key areas, you hang in here and you trade it north. You trade in the direction of the trend. But if all you do was trading in the direction of the trend, you wouldn't have tried this little pullback, because the market moves in waves. It's gone up and it exhausts itself. This is about the third or fourth, maybe fifth move up. And you can see again this area we marked off. See it? It's trading is easy. It's just common sense, and you have to wait. I've waited for weeks for this break, and then I had to wait again for 2 weeks for this break. But it's worth it. I don't chase the market because these are the moves I want. I get a break through these key levels just here. There's a potential of over 400 pips. Those are the moves I want. I don't want to be trading inside these consolidation areas. It needs to be bigger than 200 pips before I'll look at it, because this is where traders get beaten up. It's not worth it. And you can, doesn't matter how good your indicators are, there's only 60 pips in that range. It's not worth it. Keep out of it. The areas that you want to trade is a bounce off this, because that's a key area, back down, and a bounce off this area again. So tonight, at around 5 o'clock, an hour before the open, we got this move. I went down, when the alarm went off, and I took a look at the strength indicator. The New Zealand was weak, and if I go New Zealand USD, you can see it. This is where I got in. This was the move. Look at it, straight up, straight up. That's what we're looking for. And now that it's hooked around and going a little flat, and this is looking like it's tapering off, we've seen a little bit of sideways movement on the hourly chart. Okay, and we got right down in here. And on let's go to the Aussie USD. You can see it. So that's where I got in. 4 standard lots. I got in with 3 positions on New Zealand. I did it differently. I took my first standard lot off here. I had a plan, because that was an area of support. And there's another area on the hourly. They're not necessarily strong areas, but they're easily attainable. My anchor and support and resistance I get off daily and weekly charts. It's another story. So I took standard lot off there. And then when this started coming off here, I still had those 3 standard lots open. I had my stop loss in here at that point. It came back, and I thought it could retest the break of this key level here. Let me put it in for you. It could retest and come up in here somewhere and then move on, and then you know, a lot of people that trade say you should take the break, get out, then wait for the retest. You don't always get a big retest, but this looks very, very promising. We get the close of this hourly candle in 5 minutes, and I am going to wait. The reason why I'm not jumping in again here is because if I have a look at it, look, here's a key area of support here. We'd be getting in and amongst this traffic, and this is the area that beats traders up. So I am going to wait for the close of this candle. And I've got my eye on this area here. Around about there, you could go up higher, but around 71, 71.3. If we get the next candle starts to break through here, I will be re-entering on the Aussie, and I'll be re-entering on New Zealand. Okay, so let's go and have a look at the London. We're the second hourly candle into the London. Now, while all this big thing was going on, we'll come back and we'll do it this way because you need to see it live. Okay, live account. Okay, so I use my crosshairs. Here was the London candle. There, 10 o'clock. Okay, so that was the London candle close. This is the pound USD and the London candle bottom there. So there's the open, there's the close feeling near there. That was the Frankfurt candle, this one here. So I was tied up managing my trades on that breakout on all my platforms on the Aussie USD and the New Zealand USD. So I couldn't focus on this. When I finally got to break even on those trades, we were already through this candle here. And I looked at it and it was way up above here. So when you set up for Frankfurt, that's the candle before Frankfurt there. And I was set up because I always like to get in, try to get in half an hour before the Frankfurt candle is going to open. There's the candle before Frankfurt. I think that's right. Let me just check. 9 o'clock, no, that's the Frankfurt candle there. And the one before, I missed out on this little move altogether because I was tied up. When I came back and got in here, this candle had broken through here. And so what I do now, once the Frankfurt candle has finished, I mark the high and the low and I'm looking for a breakout. I missed the breakout. And I'm not going to chase it. And it was the same on the pound caddy, had a good move. And as you can see, I'm already in the pound cad. So what was different between this and the pound USD that I didn't chase? I'll show you the difference. This is what it looked like on the hourly. So here's the Frankfurt candle. By the time I got my trades to break even, that's the high of the Frankfurt candle. We were already halfway up here. So it was too late. I missed it. And I missed it on the pound ZD as well because I was tied up. And as you can see, I've got in. And we'll talk about that. So what's the difference between not chasing the pound USD? The pound JPY hasn't fired. I'm not interested in a trade. There's the London candle right there. I'm not interested in a trade because the strength indicator pound JPY. There's no divergence between strength and weakness. That's why I wasn't interested. I know I just got sidetracked. But let me go back to the pound caddy. Why did I get in here? Go back to the daily time frame. Where's the key area of support that it's breaking? If we get rid of the London and Frankfurt highs and low lines, and I get out of here altogether. Now looking purely from a daily, the daily candle change entry was here. I also, on this account, trade that as well. But the reason I chose to get in when I got back and saw this was because coming back to the daily time frame, I could see it was breaking a key area of resistance. See, look at it, really tight in there. And my strength indicator is spread. The CAD's the weakest, the pound's the strongest. So purely from that point of view, even though it's too late on the hourly and I should have been in here with the London breakout, but I was tied up with some pretty good trades. I didn't want to chase the market. But I didn't go, oh, well, I've missed that, go look for something else. I went and checked the daily because I had an alarm set up in here, and that was the alarm for it to break this way, so I can take that off now. But I had an alarm set in here at this key level, 174, and it had gone off, and I was able to check it. So that's why I'm in it, and it's the same with the New Zealand USD. Sorry, the pound New Zealand. Very similar thing. Breaking key levels. I had pending sitting up here because I wanted pending sitting up here, because if it breaks this, I think that we can see a move up. So that's become a long-term daily candle change trade. So as far as the London and Frankfurt goes, there's not much on offer. I'm watching the pound US because the USD dollar index, and let's go have a look at that again. There we go. You can see that the daily has been down all day. Yesterday we got this pull up and spinning top. Now we're going down again. So I can see this coming down a bit more. So it means that possibly we're going to get a bigger move up on the Euro USD. And if you're not already in this trade, all I would do is place a pending order above 1800. I would not try to chase the market. Either wait for this candle to close, we can go down to a smaller time frame, in my humble opinion. You can see that it's moved up, swung, and moved again. So remember, it moves in waves. Some waves are bigger than others. And 1800 could be the stopper here. Let's go and have a look to see what's happening on the hourly. Yeah, you see, yeah, 1800 could be the stopper. It's looking very suspicious to me. I wouldn't be wanting to jump into this because this here is the key area. You can see it, 1700. So if we get a retest to 1700, So coming back to the daily time frame, if you're not already in this trade, because that's my entry there on the Euro USD, and I've got all my profits locked in. This is where my stop losses are at the moment, up in here. If they come back and get stopped out, that's fine. So don't chase the market. Wait and see if 1700 holds. If it holds, wait for this scenario to play out if it's going to hold and go sideways, because it will pend up like a cooling spring and it'll either pop north or south. It doesn't matter if it's 3 or 4 weeks. It could be 3 or 4 weeks, but we are definitely again in an uptrend. So that's the Euro USD. Now let's come back and just quickly check through the pound pairs. You can see the pound caddy. I think that this is the bottom, and I'm looking at it again now from the perspective of the daily time frame. We were in a downtrend, so here's the history of the pound caddy. We broke the trend line. We retested this key area here. You can see where price reacted in the past. It either broke through, or look at it right through here. It struggled. It just really struggled. See how my baseline flattens off? And you know, people thought that we were away and going to get a big move up, and that was a decent move up. That was worth having, but you see it broke out of this consolidation range. And in here again, you know, this was a telltale sign. We've got 3 tops here, 1, 2, 3. It hadn't finished coming down after this big move. This, you know, it just hadn't. But now we see the next push down. See, it wasn't as big as this. And this is where the big money is. That's why I center everything around my daily charts. It came back, it took another push down, and I'm confident about this and hanging on to this trade. And the reason why I'm confident about this is because we've got a double bottom in here. And in here. We've broken the trend line. And we've actually got an inverted crown as well. Now, I'm not a huge fan of crowns because they don't always play out. But here's the head. Here's the left shoulder. Here's the right shoulder. And that marked the neckline. And as soon as it busted that neckline, I was always going to trade it. And that's what I predicted last week, is where it was going to go. I know that this is a little bit of this area here is going to be hard for it, because this area here is the key level now. What's it going to do? Is it going to go up a bit more, come back for a retest, and then go up? It's the $64,000 question, isn't it? The market will tell us. It will tell us. This is where traders get beaten up. Okay, I've just got a box. We're entering in dangerous territory. So I've got those trades at break even now. I don't mind if I get stopped out, but because of the strength of my strength indicator with the CAD and the pound like this, and this is an hourly chart. If I go to the 4-hour chart, you can see it. It's still looking really good. New Zealand's looking weak. I see on the 4-hour it's crossed, so yeah, we're looking to get into that again. But this pound CAD is looking good. This pound New Zealand is looking good, see? Strong, weak. The pound Aussie is starting to look potential as well. Let's go and have a look at that. So that was the pound Aussie. I like this. I've got an alarm. It's wonder it's not going off. It's quite not there yet. But this is the area This has got to take out. I'm not, and the alarm hasn't gone off yet, but I've got pending orders sitting right in here. And I'm watching that strength indicator, and probably before I go to bed I will have a couple of entries in here, because in the context of the daily time frame we're looking at a technical pullback. You know, here's the first move. 1, pullback. 2, pullback. And so that's 1, 2, 3. But it's the second push, and that's the third push. After the third push, if you get this flattening curve in here, you're likely getting ready for a decent technical pullback or a change of direction for a while. Now, for this to be a reversal, it would have to come back up and break these areas here. So for me, the way I determine whether it's a true reversal is not Fibonacci. Here's the first push up. We're on the first push up at the moment, and I'm looking for it to do this. Up. Then a retest. And then a decent push up. It's that second push up that's usually bigger than the first. And the reason why that's important is that after this first push up, wherever that ends, wherever that high is, if it pulls back and then takes this high out, at that point, for me, it's a reversal. But until then, this could just be a technical pullback. Pound Swissy, very similar. You can see I've got alarms here. It's not set up yet, but if I get a break of this trend line, so I'm aware of all the bigger pictures. Let's go back to the pound. See if we can get the cross up here and see if the crosshairs does it. Yeah, it doesn't give me the time like my platform. But anyway, no harm, no foul that I've missed these impulse moves. So the pound USD, we're now, that was the open candle, second hour, we're into the third hour. Now I wouldn't be too keen to trade. I don't trade breakout trades after the first candle of the London Open. There's the London Open. Then candle, it's finished. Now I would trade that bit of impulse because that broke the high. And if we put our lines in here, here's the high of the London candle when it finished. There's the low of the London candle when it's finished. So there's a little impulse move there, and depending on what I saw on my strength indicator, but let's measure it. This, you would have got this by the look of it. I'll give you this. Only 11 pips. So coming back to the strength indicator, this is a pound USD. The reason I didn't trade it was because at the time, a few hours ago, and if you go back to the hourly so I can see the hours, you can see that there was no divergence, real divergence. See, it started to move up, but you have a look at the pound USD, it'll come out, there we go. No divergence, see, traveling in the same direction. So it stays out. The pound Caddy and the pound New Zealand and now the pound Aussie look like the play. So just before I wind up, so I've been waffling on for half an hour. Here's the pound CAD. Now because I missed the initial breakout, what do? How do I approach it? Okay, this is, by the way, a break at a very key level, 1.81. So I think that that was the high of the London candle, and that was the low. Just check. No, that was a Frankfurt candle, so there was your impulse move during the London candle. What happened? You got another one there. You could have got that. So if you had taken this, you would have been sweet as. So that was your first one. And then once the Frankfurt's, sorry, let me back the truck up. There's the candle high before Frankfurt open. That's the Frankfurt candle, that's the London candle. So you would have got that one. And once you get up there, how many pips is that? This would have worked out well for you tonight, 22 pips. So remember, with the London, I take 3 positions. Now, if my account is $1,000 and I only risk $1 of my capital, because I protect my capital, that means I can risk $10 on a trade. So what would my pip size be? We get in here, that's 19 pips, because I put my stop loss under here. So 19 pips at 10 cents is $1.90. 19 pips at 50 cents a lot, or 20 pips, that's $10. So what I do is I take 2 20-cent trades and one 10-cent one. I take the first 20-cent lot size off here, and I bank it and draw my stop loss to break even on the other 2 positions, or you might decide to take the 10-cent loss size up. And now, because you're in break even and you're protected, you see what it does, and look what it did tonight. From there, you ran another 32 pips, so you would have got your second target of 20, and your third position will still be up, and you would have been 71 pips up. And of course, as soon as you're in profit and you're at break even, you can then go get another trade and still protect your capital. So there you have it. I hope this is useful. Give me a tick, will you? And subscribe so you don't miss out on any of the other videos that I bring out, because I'm going to start bringing them out regularly and do little 30-minute videos on what we're doing. So take care, protect your capital, and I hope that you got some of this stuff. The pound USD, as I said, no divergence between strength and weakness, and the pound Swissy isn't doing anything either. You can see there's the Swiss looking likely with the cross. There's the 0 line, which is important, but if we really got to move down on the Swiss pound, let's go take a look at it just quickly before I close this video. That's what it looks like on the charts. Now we'll go back to, don't take any notice of this, I don't use any of this anymore, this is why. Let's go back. So let's check that. So it looks like there's a possible move going to take place. Let's just take, watching the daily, I was a little bit skeptical until we see. If I squish this up, you can see that this here, forget the London breakout now because it's too late, it's only, but you can see here that this is a key level. Okay, and I'm quite happy to change it to candles for you. See, it gives me now from there to there is 30 pips. So that could be worth a little trade. I would not put a big lot size on it. Could be just the start. This is 1 hour. Let's have a look, see what it's doing on the 30-minute. Just takes time to load up. Okay. So you can see the big picture, how we've been in this range through here on the daily time frame. It's a big range, and we're sort of at the top third of it, but it's looking, when I look at the strength indicator, here's a really good bull signal here, a morning star indecision over the last couple of days. Let's go and have a look at it on the 4 hour. Nice strong candle which coincides with what is happening in the strength indicator. See the cross? And on the 4 hour chart you can see that in here you've got a shelf of resistance that's been broken. And it's definitely starting to move up. I like the fullness of the body and the tail here, along with this signal. Let's just take a look at this. And you see, look, this is a prolonged head and shoulders. We should change that so you can see it. So it's bright and limey and thick as. That's better, isn't it? And there's the head. There's the right shoulder. I mean, you could say that this is you see, this is the trouble with patterns, but I like there's a triple bottom in here. And I know that that's stretching to say that's the head and shoulder. That's why I don't like patterns. That's why I like support and resistance. I like what I'm seeing on support and resistance. So let's go down to the hourly candle. It's broken that area of resistance. Let's just take another look. I like this. Let's just check things here. Hasn't really turned on the 4 hour yet. And it won't have done on the daily by any stretch of the imagination. There's still no divergence between the weakness and strength. But that hourly chart looks as if it's turning. And it's not down here yet. If it was down in here, I'd be a lot happier. So, coming back, that's a key level there, remember? This could just go on. It's only 26 pips, so I'm just going to take a couple of dollar lots on this. I'm going to go 3. I'm going to buy the market. 1, 2, 3. Now my stop loss, I'm only just dibbling my toe in the water because I think this is going to go up and test here. Okay. Let's go back to the pound head for a minute. So here we have our trade. Looks like it's moving quite well. And I don't know what the pound Z is doing. It looks as if it's stalling. I think I'm going to close that out. It's only about 80 cents up. I'm not happy with that one, so I'm out. It should be like it to one. Yeah, I've just pound Z. I'm just going to take that little bit of money. You know, it's only $3 or $4 on each position, so take a look at that again. Just not happy with it. So it's trading into these key resistance right there. I need to see it. I'd be happier if it takes this out. I'd get in again if the strength indicator was. Let's take a look at it and see. Now see how it's hooking up now? Both the New Zealand dollar and the Aussie dollar are hooking up. Pound CAD is still fine, so I'm glad I didn't get into pound CAD. Or did I? Can't remember. Just check it out, eh? Yeah, I did. I don't like when I see this hook. There's a pound CAD. I'm hopping out. Oh no, that's a pound CAD. Pound AUD. I didn't get in. Thank goodness. Pound CAD, I'm good to hold. We'll just go back to the hourly now. I'm going to take one of my positions off. Just the reason being is still pretty strong. No, I'm okay. See the strength here in the pound. See what's happening on the 4 hour. No, we're all good. We're all good. I'm happy. I'm a happy camper. We'll hang on to that. Wonder if I can. I would sneak my stop losses in. Yeah. 174. Okay, I just get my stop losses in as quick as I can. And I want to move into breaking. So here, let's see, so here, modify. If it goes, it goes. It's looking quite positive. I'm happy. Right, there you have it, and I'm sorry for the length of the video, but hopefully that gives you some helpful tips, and you can see what I'm doing and why I'm doing it. I'm just checking out pound again. Look at it, it's broken this here. I just heard an alarm go off on my other platform. It's breaking that key area. It's a key area there of 3,000. Let's take a look just before I go, and I want to have a look to see what's happening with the pound USD. The daily's still looking good. I can take that break. I think I will. I'll just put in a couple of little. I think that will be good for the rest of the session overnight. I like to strengthen that too. It's breaking high, this candle here. So I'm going to go on just a couple of small trades. There we go. And we're all good. You can see that we're live, and we're doing pretty good, really. Doing pretty good. So let's take a look at the pound USD. It looks good, but here are the trades that we've taken under the London breakout. You can see here that the pound caddy's moving up. Pound Swissy, we're in. We'll be nearing taking the first one off soon at 20 pips, which is around $20. So this is dollars obviously. I really prefer using this because it helps me to have financial management, a better handle on it when I'm managing trades. I've only just gone back to the dollars and cents because I found that when I started trading, dollars and cents were not good for a fellow trying to learn to trade, and I've been trading 8 years now, and I've only just gone back in the last 6 months to this. So we're doing all right. That must be nearing 100 pips. Oh no, $2. It's only 100 pips would be $400, wouldn't it? Yeah, roughly. And that's 4.5. So we're probably sitting at around about not too many pips. 24. Yeah, there we go. So we've got another 25 to go. With this, with the 3 trade, as soon as we hit 10 or 12 pips, I'll be taking this off. I've got that already set on the platform, and we're just waiting for the pound USD to get going. So there you have it. And I think that this looks reasonable. If we go back to the 4-hour chart, you can see that it is great. This is an area that we have really struggled with before, and it's an area where prices reacted before, and looks like we're on the way. That you can see. And this is what I mean by I think that this pair is actually reversed. See the move up? We come back down, we made a higher low. This first attempt we didn't make a higher high, but then we made a higher high, and then we've come back and we haven't come lower than this, and that's why I think pound USD's reversed, and that's why I'm quite happy with getting into a trades in the direction of the trend. So there you have it. I hope it's been helpful. Look, if you don't want to ask questions in the main chat room. Those of you that are part of my chat room, what I call the trading room, you have access to me through Skype on personal connection. If you're not comfortable with asking questions and talking questions in the trade room, just Skype us on the personal Skype. And if anybody is watching this that has not part of our trading group, just hit the subscribe button, leave me a comment and just say, hey, can you get in touch with me? And I'll do that. I'll give you a contact email that you can get in touch with me that I use, because I do protect myself and my family. My personal stuff is not out in the open, and I can come back to you. No problems at all. So happy pip hunting. Protect your capital. Take your profits when it's there, and take your losses when they're small. Catch you later.